Good morning, everybody. It's January 28th, 2020. As a risk warning, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. And by taking part in these sessions, you agree that your job is to study, learn to plan, and take your own trades. And if you require personal financial advice, you will consult your financial advisor. Just a couple things to get out of the way. You can get the slides for January at robbybooker.com/0120. Get on the Telegram channel at robbybooker.com/telegram. That's important. I have a whole batch of brand new coaching lessons that are coming out very soon, within the next few hours. Remember, any success in life or trading is about incremental improvement. So if you feel like you haven't made a ton of progress, you're going to make incremental progress and feel like you're not getting very far. And then one day you're going to make some giant leap. And there's a book by George Leonard called Mastery. And I strongly recommend that if you've got some time off of work this week, you buy this book and you read it. It is only about 190 short pages. And I can summarize everything in the book basically by telling you all success comes with incremental improvement, plateauing, then giant moves upward, and then plateauing. And people get frustrated on the plateau and they give up. You can get the indicators at robbybooker.com/Knoxville. And we'll talk more about getting the indicators and so forth later on. It's January 28th, 2020. I want to be ready for the market open in 5 minutes. So let's just have a quick conversation. Remember, the foundation of success is training. This is now going to become something that I say so often it won't be meaningful. So I want to spend a moment here and remind you what that means. A lot of people will tell you that paper trading is irrelevant, and it's not. It's the best version that you can have to test the greatest number of situations. The problem with paper trading is most of us don't do it in a guided situation with feedback. And because we don't do it in a guided situation with feedback, it's less useful, and we don't know where we went wrong. The reason that we want to do a lot of training, which means we go back on the charts, we pick a trade, we open up Thinkorswim's Think Back platform, and we take a trade based on historical price movement, and then we move it forward and talk about it. The reason that we do that is because when it comes to a real life situation like we are in today, where the emotions run high, we can fall back on our training. You see, if you practice adding to a successful trade in Think Back 50 times, and then on a Tuesday in January, it's time to add to your UVXY trade, you have already gone through the motions in training, and you have this muscle memory for doing that. And that's exactly what we are going to be doing today. And the reason we can do it is because I've practiced it. Second of all, I have a guidebook. It is coming along nicely. It's the coaching guidebook. And so far, I have a little section on the perfect trade, and I have a little section on the bearish and bullish perfect trades. And then I have a section beginning on when to take the perfect trade. And then I have a section started on, basic principles that don't fall into any other category. You can get this guidebook at robbybooker.com/57. Now, it is incomplete. It will not be complete until probably the end of April. However, you can watch me write it. If you go to that link, you can see the guidebook live as I'm typing even and adding sections, and you'll be able to see this a work in progress. Now, when this is all completed, we'll get this printed up. We'll get it shipped out to you in the form of an actual book, and we'll ship that to you as part of your coaching program. It's an updated coaching guidebook. I think it's going to be the best book about trading that I've ever done. I'm really looking forward to it. I call it the $57,000 guidebook because it really is a book about finding and taking the $57,000 trade. Okay, so I hope you enjoy that. You can go to robbiebooker.com/57 and you will see that. I can't emphasize enough that if you look back on the greats in sports or in any endeavor, whether it's Oprah doing a talk show or Michael Jordan staying until the lights go out and shooting free throws, or Jerry Rice waiting even after everyone's gone from practice, running up and down the bleachers, or if it's the LSU national championship football team self-organizing Saturday practices in the off season, which is why they won the championship. It wasn't a real game. It was paper football, right? Would anybody criticize them for practicing? So next time you hear somebody criticizing paper trading or whatever, you can tell them, well, I guess football teams shouldn't practice anymore, and I guess Yo-Yo Ma shouldn't practice the cello anymore because it's not a real concert. Anyway, I could go about that all day. All right, we're going to watch the market open. Before we do anything else, is it time to add to a winner? Well, the UVXY printed a bullish profit circle. So if I believe in what I say, then I believe that it's time to add to this trade. So that's exactly what I'm going to do today. It's 8:30 Central Time, 9:30 Eastern Time, and it's time for me to open a trade. So I'm going to jump over to the Robinhood platform and I'm going to add to this trade. Now I'm going to try to be smart about this, but I am willing to lose all. I know this sounds crazy. I'm up $4,620. I've been up as much as $5,000 or more dollars, $5,180. I am willing to lose all of it. You hear me correctly? I'm willing to lose all of it. Now, I don't have to buy the $12 March calls. I can actually buy something a little further out of the money with a different expiration. So we could go to the June contracts and I could trade the $14 ones. I could go to March. I could look for something pretty inexpensive like the $15 contracts. I like options that cost about $1.50 or so. So I could buy the $16 March 20th calls. I could buy 10 of those, and I will have added to my position. Now the spread on that's pretty wide, so I'm gonna reject that idea. This is a 30-cent spread on the $15 ones. Wow, their spreads are pretty wide. I mean, were they this wide before? I don't remember them being this wide. The $13 options have a 45. Okay, so they are kind of wide. All right. All right, well, let's look over at bar chart. Let's be smart about this. I'm not in any rush to do anything like immediately or rash or whatever. Bar chart's always better when I log in here. It shows me more information for some reason, so I'm going to go ahead and log in. Yeah, it doesn't. I don't remember them being that wide before. It's probably just because it's the market open. All right, so let's look at the volatility and Greeks. See if I can see open interest. I can. All right, so let's look at the June expiration. I think I want something, maybe if I can, a little bit further out. Not a lot of volume until you get to the $20 calls. I wonder if those are pretty cheap. I mean, those are all right. There's not a lot of open interest in those. Are we that early on in the game here? Oh, I'm looking at the 2021 ones. No wonder there's not a lot of open interest. Okay, here we go. June 19th, 2020. I know it's frustrating when you're watching me and I'm looking at the wrong thing and you're yelling at the screen. The $15 ones have some significant open interest. I would consider the June $15 options $3.28. There's the spread that I want. And I could put $3,300 into that with 10 contracts. Yeah, I'm kind of down for that. Going to refresh this and see if the prices change a little bit. $15 June. Yeah, they changed a little bit. 10 of those. Oh yeah, they are changing a bit. Okay, good. All right, I might get a good price on this. What if I said I wanted to pay $3 for those, not $3.18? I could put $3,000 in on this trade. Okay, I'm going to go ahead and do that. Long call, June 19th. That trade is pending. So here we go. So I'm going to, now is the time to press my advantage. I'm not going to encourage you to do anything different or whatever. So I bought the 19th of June $15 calls, or tried to, at $3. Now I might not get filled on this trade. I'll find out and we'll see. I'm not entirely sure that I'm going to get filled on that trade. We will see. It's probably not going to be easy to get filled on that because the UVXY has already started to move a bit, as you can see. So we'll let that go. I put an order in. It's the best I can do. That's what it's all about. And I just want to speak for a moment about the different things that could happen next. So I am willing to lose all, I know this sounds insane, I am willing to lose all $4,000 or $5,000 of profit on this because I did not plan this as a $5,000 trade. I planned this as a $57,000 trade, and I'm not going to accept $5,000. As we discussed yesterday when we looked at the long call calculator at optionsprofitcalculator.com, if I have 35 contracts and the price goes to $16, $50, $18, I can make between $12,000 and $16,000. If it goes to $22, I can make about $31,000 or $27,000. Those are all numbers I'm comfortable with. Those are all perfectly reasonable numbers. I'm perfectly happy to make those kinds of returns. Now, if it does, we talked about the fact that I probably didn't trade enough contracts initially to get to $57,000. Maybe I can add some contracts to the mix here and I can get to a trade that makes that kind of money. But we would really have to crash at this point as a market. And I don't wish that on my worst enemy. So we'll just see what happens next. But I am willing for this to become a zero profit trade and go all the way back down to zero, which is annoying and lame. So Kelly says, why would the price change to $3 for that call? So as the UVXY goes up and down, or as volatility increases and decreases, or as the number of people who want that option, the price will increase or decrease accordingly. So if nobody wants that option, a market maker will start to lower the price of the option to encourage buyers. If volatility starts to increase dramatically and the S&P 500 begins to crash, the UVXY goes up, and that means the price of that option will go up. So it's really supply and demand plus volatility That's the kind of thing. So Ali says, why would I not choose the $14 option instead of the $15 option? It's a really great observation. The only reason I would say is because the open interest in the $15 is greater. So my hope, Ali, is that when it would be time to get out, we'd all have an easier time doing that. So it's all about sort of picking the option that's the easiest, not only to get into, but would theoretically be the easiest to get out of. I mean, look at the $12 call on the UVXY that we're in right now. 23,000 open contracts. Look at that compared to all the other contracts. That means if it came time for us to exit the trade, we really shouldn't have any problem doing that. So now I'm fairly certain I did all of that correctly. I'll go back. I'll just one more last thing before we move on to the other instruments. I have friends and subscribers who sometimes correct me and nudge me in the right direction to change what I'm doing. And I have historically been uninterested in meaningless refinements. This is I don't remember where I read this, but um, if you turn your life into an objective that you're going to get 80% of the way to most of your goals, you are going to be 1000% more successful than everyone else. And so I look for some open interest. I look for the profit circle. I look for the early entry. I look for the blah, blah, blah. And there are people who get frustrated with me because there's a better contract or there's a better delta or whatever on the, but what happens is I get bogged down in those details pretty easily. And then you can waste, as many people do, they can waste their lives trying to get to perfection. So Ali, I may be even doing that wrong. Just to be transparent, I may have picked the wrong one, but in general, I'm 80% of the way to everything that I want. So if I'm planning a $57,000 trade and we get to $40,000, goodness gracious alive, or 30,000 or 27 or even 12, like it's we're so much further along than than so many other people. And if you think about it, I just want to stop and look at this chart for a minute. This is everything we have been waiting for over a month. So to me, this is a beautiful, beautiful day. This is exactly what we have been waiting for. We planned it. We waited for it. We took an initial loss on it. We planned it again. We took it. We stayed with it even though it was a little bit shaky. And then we got what we had been waiting for. It's a good feeling, and it should inspire you with some confidence that you know what to do. And now it's time to press our advantage, which is frightening. But if my trade never gets opened, that $14 call never opens, I still have 35 contracts. I'm still very happy. I'm still very pleased. And I don't need it to become anything more than what it is. And I'm happy to let the market take it the rest of the way. There's one other trade that we need to have a sort of a detailed conversation about, and that is the pound yen. So this is moving in the right direction. It broke the trend line. Check that out. This trade is now going to produce a possibility of an addition to the trade. We can press our advantage here. Now I'm up $107 on this trade. That's not a meaningful amount yet. But if this rises back toward that trend line and goes back to about 142.10, I want to sell it. Now we're already oversold. I don't expect it to be anywhere else. And things can stay oversold for a long, long time. But I'm going to keep the trade I have. I'm not going to do anything different. I'm not going to add to it yet. I should have added on the break of the trend line, but I missed it. And, hey, listen, I'm okay with that. That's the other one I wanted to talk about. Now we're going to talk about a bunch more trades, but what I wanted to do is provide you with a current open trades list. Do you like this? I bet you do. Here are all of the current trades that we have talked about that I'm still in. So here are, in the order of that they were introduced or whatever, the current options trades. Home, I own the $6 March 20th calls. Happy to be in this trade. It's not going anywhere, and I wouldn't expect it to go anywhere for now. We're in the UVXY, which we just talked about. I'm still in the EWI, which popped up today. It does this kind of thing. It goes down and then it pops up. I have the $29 March calls. It's trading at $29.20. This trade is currently negative. It's probably losing, yeah, it's over $1,000. So I will let this go for 24 hours, and then I will take it from there. LABD. We all know about this trade. We've been talking about this quite a bit. I love this trade. Now, you'd think that pharmaceutical stocks, biotech stocks, you'd think these would be doing better with a virus thing going on. I already took half my profit off the table, so I made $500 no matter what. If this goes to zero, I need to close the trade and just keep my $500. But I think this still has the potential to move a lot more. It's kind of scary that I could end up with no contracts left on this. I'm currently up $225. The temptation is, of course, to take the $225 and be done with all of this. That's the temptation. And, this was just the $1,000 trade that we planned. So I could have taken the $1,000, but we have been practicing letting the second part run. So the training dictates that we go ahead and we let this thing play out. So I'm going to do what I said. Now I also have a credit spread on AT&T. I sold the $38 calls and I bought the $40 calls. And I want to show this to you today because this is an automatic income trade. And some of you are asking questions about automatic income. And so I want to share with you what I did. When I was filming the promotion for automatic income, I had people come to the front of the room and take trades on my account. And I just basically had somebody blindly take this trade in my account. And what we did was we sold a $38 call on AT&T, and we got money for that. We received a credit for that. And let's just say we received $2. And then we bought a $40 call, and let's just say we paid $1 for that. We got to keep 2 minus 1. We got to keep $1. These are rough estimates. Now, if price stays below $38 in June, we get to keep our dollar because both of these calls will expire worthless. There's no value in those. If price ends above 40, I lose only what I put into the trade in the first place. I can't lose any more than I risked initially. But they gave me a credit to start things off on this trade. And so if we look at this credit spread, this is automatic income. This is what it's all about. I have to wait until the end of the week, or in some cases, June. I have to wait to get my full $1,241. I only had this one expire in June because I was filming a promotion while we took the trade. Usually these options would expire within a week or two, and I would get the full amount of money much more quickly. But this is not the kind of strategy that I want to spend an enormous amount of time doing. I'm happy to show it to you. I'm happy to talk about it, but we're not going to ever turn this into a $57,000 trade. And for those of you that have smaller trading accounts, this is really not something that's going to produce significant sized gains. And so, like I said yesterday, we're going to focus on the stuff that will. Okay, I'm not going to talk anymore about that because it's just going to go down a road that we don't need to be on. What we do need to talk about are all the rest of my current stock trades, some of which you have as well. I'm long Nokia at $5.30. That's underwater right now. I'm long GTE, ONTX, DS, NLS, and Club. Those are all insider trades. Those are all trades that had perfect trade setups, and insiders were buying the shares. Some of these are profitable, and some of these are barely underwater, and all of them have massive potential. And they all have in common one thing. These are way easier to trade with a small account. Way easier. Like amazingly easier. So we would focus on these. Because ONTX can go to $2 or $3. We want to focus on something that doesn't cost very much to get into, but has the potential to go a long way. Because Club was only $2.70 and has the potential to go $5, $6, $7, $10 or whatever, suddenly and instantly, that's the kind of thing that we want to focus on. So there's Club. It's at $2.11 right now. Everything's having problems, right? The market is just having problems right now. All right. LaDonna says, no matter how this UVXY ends, this will have been the best training I've ever had. I had to move past emotion yesterday and not just cash out when I saw the positive dollars, and I'm learning to be patient. We're all in it together, and so am I. Totally learning to be patient too. Finally, says Sue, to the open trades list. I'm doing better, Sue. I can be taught. It is okay if I wait the UVXY a little if the price goes back to the weekly pivot for a better entry. Leonardo. Yes, that would be perfetto. That would be perfect. Jeff says the virus was likely stolen from a biotech or CDC, so biotechs are spooked for the possibility of future regulation or scrutiny. I totally love your explanation. Oh, Kevin says, did you liquidate Reed? I may have that in my other account. Okay, we'll talk about Reed for a minute here. I don't know where this one is. Kevin, this might be in my Tastyworks account, so thanks for reminding me. If you have profit on Reed, I wouldn't argue with moving my stop to break even. If I have a loss on Reed, I would keep my stop loss in place. So I'm in this in Tastyworks or Thinkorswim. I'd be willing to lose $1,000 still on this, Kevin. The bearish divergence and bearish profit circle on this do not override the two profit circles, the bullish divergence, all the missed pivots, and the insider buying. There's too many things stacked up in our favor. This still has all the potential that it originally had. I wouldn't change a thing about it. In fact, I'm going to grab this chart and put it inside of our coaching guidebook under the not the automatic income, the insider money signals. That's the insider trading thing, newsletter service that's coming out. Not for a month or so, but we're still looking at these. We've been looking at these together for a long. John closed Reed with a 40% gain. That's amazing. All right, Sue, write me an email about curriculum development. Awesome. Okay. Today, we're not looking for new trades. Not interested in new trades. AER is still dropping, which is beautiful. I dumped it. Remember yesterday I said I was going to clear the decks and make some room. I wanted to get some money back in my account so I could deploy that on adding to my UVXY. I closed MIME, closed IBB. That was mildly profitable, and I closed RSX, which if you are still in RSX, so I took a small loss on RSX. I would take a small loss on this and free up the capital for some other things. Today's a good day for like house cleaning, right? Cleaning up the garbage. Chuck's up 23% on Reed, sold some and rebought on a dip. Wow. That's amazing and wonderful and makes me happy and smile. That's great. We could look at this other. Let's just scan through some. Wow, look at Beyond Meat. I still think that might be the greatest example of a perfect trade ever. That is so beautiful. Arista Networks. I don't even know why I have this here anymore. Jack in the Box. ENPH, Enphase Energy. Don't really see any purpose for having that here. Abraxas. Would love to see a couple bullish profit circles. Western Digital. Don't really have anything to say about Western Digital. TTD, the trade desk. That's a beautiful, perfect trade back a ways. Nothing really going on there. Tupperware. I was looking at this yesterday. I would love to see this print another bullish profit circle. I would love to see that. Might as well just do a little scan here on where did Magic Formula? There we go. So let's look at the Magic Formula stocks real quick. AbbVie. It's going to take over Allergan, whatever. Don't care about that. Don't care about ALSN right now. Don't care about M. Oh, do you care? Look at that, Altria. All right. So let's go back and talk for a minute about this. Maybe I do have something to say about trading today. The Magic Formula investing is based on the little book that beats the market. It's now called the little book that still beats the market. And the accompanying website is magicformulainvesting.com. You can register for a free account and scan for stocks. We did that recently in one of our sessions. It pulls out a list of companies that tend to make money from the money they invest. They have a great return on investment and blah, blah, blah. It's a fundamental scanning mechanism. This is a list of stocks that doesn't just go up when there's a bullish signal. They tend to reliably go down on bearish signals. Like that. So I think it's reasonable to plan. Let's just look. Let's see what we got here. Now it needs a month or two, needs 60, 90 days. I'm interested in maybe the $50 puts. I bet the spreads are amazing here. So March 20th is really, yeah, I think we got to go for June. $3.25 for those. I could buy 2 of them. 3 of them. $5 of them. 6. 7's a good number. So if I trade these for $3.25 and the stock drops to $46, let's use the options profit calculator. So let's say we buy. I'm going to zoom in on this, everybody, so you can see it easier. Okay. So if we trade MO and we buy the $50 puts for $3.25, and we trade 7 of those, we'll calculate the values. So I got to zoom back out here so we can see the dates and stuff. So if, let's say on February, oh, I got to change the, oh, no, profit loss dollar value. So let's say that on February 5th or February 13th, we're trading at 46. That's $1,000 win. Okay. We have earnings coming up or anything? Oh, we do. Oh, okay. I'm going to take that trade. We'll see if that executes. Now, I probably could have looked at that open interest. How's the sound today, by the way? All right, the $50. Oh, wow, we picked a good one. Plenty of open interest, 2,400. Yeah, we're fine. We picked a good one. No, those are the calls. Sorry. We picked a good one. We're fine. The better calls were probably the $45 out of the money calls. $9,000 in open interest. 9,000 contracts in open interest. That's pretty good. I think we're good. We're fine. So Jeff, Finch, robots. I'm going to give you an answer today. Give me a second to just put this on the options list. So MO, $50, 19th of June puts. And this was a perfect trade plus magic formula investing. Okay. So I traded at 325 per contract. Jeff, I'm thinking of an answer for you, so you don't have to wait. All right, so no later than January 31st. I want to be really careful about this. It needs to be, I think we need to make any conversation we have about the robots. We need to fold that into the $100 challenge Facebook group so that we don't, in this webinar, get too far away from things. Like you could imagine, even if we had an hour each day together, we wouldn't be able to cover enough. So I think we'll just get you into that Facebook group, and then on the 31st kind of do a re-kickoff of that. Jeff, would you be willing to record like 10 podcast episodes together where you ask questions and I answer them about the robots too? I'm not refusing that to anybody else, but I don't want anybody here to get the fear of missing out, like there's anything to gain from being a great robot trader that's better than doing the things that we're doing right here together. Like the things we're doing right here together are the highest, best version of everything we do. But okay. So Jeff, I'm assuming you said yes to that question. Okay. So Jeff, I'm going to ask you to email Holly. I'm sending you her email address and say, Rob invited me to record some podcasts together. Can we work out a schedule for us to do that? He asked me to write to you. So you write to Holly and let her know that. Mark says, what about earnings on MO? I actually prefer that there are earnings. Makes me happier. I'm thrilled that there are earnings. Alan did some crazy awesome stuff with Reed. Sold the June 250 calls at 10, bought them back at 5, 50% return in 2 days. Then put a limit order to sell the 10-cent calls again. So sold them again at 10 cents and covered at 5 cents again. In a few days, another 50% gain. The minimum option increment is 5 cents, which helps the strategy. That's amazing. I'm still bearish the British pound, kind of long term bearish. So Doug asks, Doug, no problem. Glad you're here. I tried to buy today the UVXY. I tried. I did not get filled yet. I tried, have placed an order to buy the 19th of June $15 calls at $3. By the way, the AER 21st of February $60 put is up 74%. Oh my gosh. Jeff says, in a small $1,000 account, I'm up 100% this year with ideas from what we are doing here. Holy moly. I got a piece, says John, of DPW for an insider trade. Let's take a look at that, and then we'll kind of go on our way. Wow, that's a beautiful looking chart. It's a port operator. I wonder if they're affected by all this China stuff. Okay, there's a spelling error on the slide. Thank you, someone. UVXY, the 57, a profit circle. Thank you. There we go. Okay, friends. I love you all. I am super tired today. I'm sure you can hear it in my voice. And I'll see you tomorrow. Bye for now, everybody.